Now, sticking with the day's Sens headlines, Bidcorp has delivered a solid full-year performance, reporting an almost 7% rise in earnings in a challenging trading environment. The International Food Service and Technology Group said its European businesses delivered double-digit growth in revenues and trading profits, and locally revenue growth was supported by a stronger rand. CEO Bernard Berson joins us now to unpack the year that was for the group. Thank you so much for your time, Bernard. Now, how would you characterize the year that was and really Bidcorp's level of growth in this reporting period?
Yeah, the year was challenging. I don't want to overstate the conditions, but they weren't totally favourable around the world.
Yeah.
We had a lot of things that aren't going great in economies. The consumer's under pressure.
Yeah.
Food inflation had dropped to zero. There's wage pressures. There's geopolitical instability. So there are a lot of negatives. Notwithstanding that, I think our business performed very admirably, and our teams around the world are to be commended for a great performance.
Yeah. You mentioned the impact of inflation there. Just maybe go into more detail on that in terms of how inflation is playing out in your operations. You talk about food inflation dropping to zero, but you also mentioned in the results the sticky cost inflation. How's that playing out, and also really its contribution to margin management?
Yeah, well, it has been challenging because food inflation was rampant 2 years ago. Then it came back dramatically to zero, even deflation. So in the year we just finished, we say there was zero food inflation in our basket. Yet on the cost side, there was some sticky cost inflation, particularly on the wages element. And wages, human cost, is about 70% of our expense base. So that obviously creates a little bit of a challenge where you've got a mismatch between food inflation and cost inflation. What we are seeing going forward now is there's a slight uptick in food inflation, and then there's probably a downward movement on other cost inflation, particularly wage inflation. So I think we've seen the inflection point, and there's more of an equilibrium now of those two factors.
And then how's that then filtering through to your margin management decisions?
Well, it's challenging. And it's something you have to continually balance, particularly in light of the fact that the consumer's under pressure. So our customers are doing it tough and won't necessarily accept the necessary price increases.
Yeah.
So we do have to manage margins, sales margins, with cost efficiencies, which fortunately we've managed to do, and we've increased our trading margin slightly from 5.3 to 5.5%. So we're very happy with the outcome in a challenging environment.
Right. Well, let's drill into the emerging market space. Just lay the table on the major dynamics at play. They're both on the upside and the downside.
Yeah, I guess our emerging markets cluster is a bit of a misnomer because we've got South America, Africa, the Middle East, and Asia in there. So you've got a whole lot of very different dynamics all lumped into one. Our South African businesses once again performed exceptionally well, and that's a consistent story for many years. And they're probably the leader in the emerging markets sphere for us, and really carried that result through. We did very nicely in the Middle East. South America showed improvement, and Asia we're struggling a little bit. Malaysia is doing well. Singapore, we're going through some restructuring and coming out the other end of it. And China is a tough place to do business. It's not what it was a few years ago. It's tough. It's challenging.
Well, I mean, a place that a lot of people would consider maybe better in terms of doing business is North America, particularly the US. But I do note that you do not operate in North America. But we know that the US, which is in North America, has changed the global economic and supply chain landscape with a new tariff regime. Is there any impact that you're seeing from that on your business, even indirectly?
No. And I can say that categorically because we don't trade into the US.
Yes.
So we procure food from wherever we can procure the product from most favorably.
Yeah.
And if tariffs create a disruption in one market, you can generally move your food supply to another market. So we're totally agnostic to it, and it has had no significant impact whatsoever.
We're talking about that movement into other markets. I mean, I know that Bidcorp does have appetite for acquisition, but what level of appetite do you have in a more complex economic landscape, including then, the acquisition trail into new markets?
Yeah, look, we haven't entered a new market for quite a long time, and we've learned from experience that if you do want to enter into a new geography, you have to do it at scale. There's no point in going in with a small greenfields operation, you'll just struggle. So those opportunities only arise when they arise, and we assess them as necessary. We will only make an acquisition in a market that you can operate legitimately and transparently, which does take a few out of the equation. But we remain alert for opportunity. There isn't anything at the moment. We do have significant firepower on our balance sheet. We're very lowly geared. And so if something did come along that did whet our appetite, we'd certainly have a look at it and be interested in pursuing.
Bernard, I mean, under the current economic backdrop, in what areas then are you directing capital investment inflows?
We believe all our businesses have potential to grow. So we don't take a short-term view on any of the markets. And fundamentally, we believe the out-of-home market that we service, the eating out-of-home market, will fundamentally grow in every geography we're in. So we don't take a view that says we're not going to invest in any other markets. If you take that view, I think you need to dispose of your businesses and redirect your capital. If you're in a business, you need to grow. So we look at all of them as opportunities for growth and allocate our capital accordingly.
Talking about potential and opportunities for growth, I did notice that, of course, in Europe you did see growth there, but you highlighted that Portugal is in an investment phase. What does that look like?
It's, we purchased a small business maybe about 6 years ago. I think it was just before COVID. And that business has done phenomenally well. But it's a small base that needs to grow. And in order to grow the small base, you have to make an investment. You have to make an investment in people. You have to make an investment in infrastructure. And that comes at the expense of short-term profitability. But it's short-term profitability that enables you to grow into the future. And that's where we are. We're very happy with where that business is. We did make an acquisition in February in the Algarve area. And there are plenty of other acquisitions we're looking at in the Iberian area, because we're very confident and understand it's a big market that we can address.
All right. Well, we do have to wrap up the conversation there, Bernard, but thank you so much for giving us insight into Bidcorp's growth story. That was Bernard Berson, CEO of Bidcorp.